chapter number 5. Okay, now we are going to discuss chapter number 5, which is accounting equation. And this is a very fundamental chapter. I will try to correlate this chapter with chapter from journal, and also I will give you a little bit of glimpse of balance sheet also in this. Balance sheet happens to be the second last chapter, but I will start with that concept so that your accounting equation becomes clear. Okay. Let me share my screen, guys, to you. Can you see my screen, guys?
Yes, sir.
Yes, sir.
Can someone tell what is an accounting equation?
Sir, assets is equal to capital plus liabilities.
Assets equal to?
Capital plus liabilities.
Guys, ignore any typo error. Liabilities plus capital. Okay, this assets equal to liabilities plus capital. This is an accounting equation. Clear? Okay. Now let us try to understand this accounting equation, how this accounting equation has come. Okay. I will show you something which is very early for you, but still, let me show it to you. Can you see my screen, guys? Can you see my screen?
Yes, sir.
I have
Yes, sir.
written balance sheet asset 31st March 2026 of ABC Enterprise. See, balance sheet is a concept which I should discuss in the second last chapter. But I will just give a very high level glimpse of what is a balance sheet. Then you will start understanding accounting equation. In balance sheet, there are two sides. One is asset side, another is liability side. And this asset and liability will always be equal. If it is 1 lakh, this also will be always equal to 1 lakh. Assets and liabilities will always be, this is the total of liabilities. This is the total of, this is the format of balance sheet. Liabilities amount, asset amount, total liabilities, total assets. My total liabilities and total assets will always be equal. Clear? Now, in liabilities, there are two types of liabilities. One is internal liability, another is external liability. We discussed in accounting terms, right?
Yes, sir.
Internal liability and external liability. Internal liability is called as capital. External liability is called as, let us call it as liabilities.
Creditor.
Liabilities for, you are right. Let us,
Sir, you should call creditors, right, sir?
liabilities, inside liability, there are multiple subcategories. There can be a loan, there can be a creditors, there can be a borrowings, there can be multiple things. Liability is a very broader term. Inside liability, it can be a creditor, it can be a bank loan. Multiple things can come under liabilities. Clear?
Yes, sir.
Asset means assets only.
Assets.
Assets means assets only. Liabilities includes internal liability, which is called as capital, plus liabilities, So from here only the accounting equation has derived. The total of assets should equal to capital plus liabilities. That is how my balance sheet looks like. So if my asset is 1 lakh rupees, if my asset is 1 lakh rupees, my capital will be 80,000 and my liabilities will be 20,000. Then only it will become total of 1 lakh rupees. From here only the accounting equation has derived. Clear? Assets equal to my, what is the accounting equation, guys? Assets equal to liabilities plus capital. Okay. Now this assets I will break down into non-current assets and current assets. In accounting terms, we discussed about non-current assets and current assets, right? Anything which has a life of more than 1 year is called non-current, which has a life of less than 1 year is called as current. So assuming my 80,000 is current assets or 70,000 is current assets and 30,000 is non-current assets. Non-current asset example is debtors, cash balance. Non-current asset example is building, furniture, which has a life of more than 1 year. Current asset is which can be converted to cash within 1 year. It is debtors, cash, everything.
Sir, shall I ask a question?
Yeah.
Sir, if the accounting equation is not satisfied, it means what will happen?
It will always satisfied. It will always be equal. The reason is for any transaction has a debit and credit, right? We cannot record only
Yes, sir.
debit or we cannot record only credit. As long as we record both debit and credit together, accounting equation will always be equal. Not even once or never in the life or in any company, you cannot see assets will not be equal to liabilities plus capital. It is a golden rule or thumb rule that it will always be equal. If it is not equal, that means there is some mistake. Accountant has not posted information correctly. He forgot to post either debit or he forgot to post either credit. It's a mistake from the accountant if it is not telling.
Yes, sir. Thank you, sir.
Okay. Okay. So assets equal to liabilities plus capital. This assets can be of two types: current assets and non-current assets.
Non-current assets, sir.
Okay. Liabilities also can be current liabilities and non-current liabilities. Liabilities also can be of two types. Current means I have to pay within 1 year. Non-current means I have to pay after 1 year. Okay. Don't think too much. I'm just giving too much of detail to you so that from day one your concept is clear. Clear? How this assets equal to liabilities plus capital, how it originated, I am giving the concept. Okay. And when we talk about capital, okay, this capital always includes profit also. Capital always includes profit also. At this moment, you may find it little tricky to understand. We will understand as we progress. But always, this capital will always include what? Profit also. This capital, see, this balance sheet, what is the date of this balance sheet, guys?
31st March 2026.
31st March. That means the capital which is appearing in the balance sheet is called as closing capital. This capital is what? If it is a 31st March balance sheet, this capital will be called as closing capital. If it is a 1st April balance sheet, this capital will be called as opening capital. 1st April means opening capital. If the balance sheet is 31st March, it is closing capital. If the balance sheet is 1st April, it will be opening capital. Clear? What is the difference between opening capital and closing capital? Only difference between opening capital and closing capital is opening capital plus profit equal to closing capital. opening capital plus profit equal to what? Closing capital. Or if there is a drawing or additional capital, those things will be added or subtracted. If I am making a drawings out of capital, my capital will reduce. If I'm introducing additional capital, my capital will increase. So opening capital plus additional capital plus drawings minus drawings plus profit will be my, in short, my closing capital will always include profit. By opening capital plus profit will be my closing capital. Clear? Any doubt? So far clear?
Yes,
This
sir.
is a very, now whenever you think of accounting equation, just think about this. Think about a balance sheet in which there is an asset side and there is a liabilities and capital. Just think of this, visualize this. Visualize a balance sheet in front of you. Whenever you think of accounting equation, just visualize a balance sheet in front of you. Asset side, and in liability side, we have internal liability, which is called capital, and external liability, which is called liabilities. Okay. So assets will always be equal to liabilities plus capital. Clear? From here only the concept of accounting equation has emerged. Clear? Any doubt? Okay. You don't have to worry about balance sheet now. Balance sheet we will discuss when we go to the 17th chapter na, or 18th chapter. Which chapter is that? Financial statements. Financial statement of 18th chapter. When we go to 18th chapter, we will understand balance sheet in detail. Okay. For now, to understand accounting equation, how it came, assets equal to liabilities plus capital. In balance sheet, there are two sides. One side is asset, another side is liability. Liability means liabilities plus capital. Clear? Any doubt? Okay, in balance sheet, the term is liability, but it means liabilities plus capital because capital is also an internal liability. Clear?
Sir.
That is why the whole terminology is liability. Liability will include both internal capital and internal liability and external liability. Internal liability is called capital. So my accounting equation is assets equal to liabilities plus capital. Any doubt? Sanjana, what is your doubt?
Sir, I'm not having any doubts, sir.
Okay, fine. Any doubt so far, guys? No? Very good. Okay. Now, I will stop presenting now. When we discuss about accounting equation, we will be discussing about lot of transactions. Every transaction has two impacts, I told you, right? One is a debit impact, another is a credit impact. What is debit and credit, we will discuss in the next chapter. But whenever we are doing a question on accounting equation, we have to think which two accounts would have got impacted. For example, let us take a transaction of Ram started business with capital of 1 lakh rupees. Ram started business with capital of 1 lakh rupees. Now, Ram has introduced capital into the business. There are always two legs to this transaction. One leg is in the business, some cash has come. Ram is separate and business is separate, right? In the business, some cash has come, and in the business also, a capital has come, internal liability has come, because business has to pay back to Ram whenever the business is closing or whenever Ram demands that amount, business has to pay back. So one is cash is coming and also capital is coming. Two impacts are there, right? Similarly, a furniture purchase in cash. A business is purchasing furniture in cash. What will come to the business? To purchase furniture, what I have to give?
Money.
What I have to give?
Cash.
Cash. That means cash is one asset which is coming down. Furniture is one asset which is coming into the business, new asset which is coming into the business. So every transaction that we discuss, you have to find out two legs to the transaction. We are not going to discuss debit and credit in this chapter. I will discuss debit and credit very extensively to you when we go to the chapter. I think next chapter only, right? Next chapter, accounting procedures, rules of debit and credit. We will discuss in the next chapter. For now, you have to understand in accounting equation whether a particular transaction involves an asset or liability or income or expenses. Furniture is what, guys? Furniture is what? Asset. Bank loan is what? Bank loan taken from bank. Liability. Because we have to pay to the bank, pay back to the bank. It's a liability. Salary is what?
Expense.
Sir, bank is an asset, right, sir?
Bank is an asset. Bank loan is liability.
Okay.
Loan taken from bank. I have to repay to the bank, right?
Okay.
I have to repay to the bank. So bank loan is a liability. Bank is an asset. So every transaction, we have to categorize whether it is an asset or liability or income or expenses. Clear?
Yes, sir.
Every transaction will have two impact. Every transaction will have two impact. That means if one impact is asset, another impact can be liability, another impact can be income, another impact can be expenses, or it can be asset also.
Okay.
Clear? So we
Yes,
will
sir.
identify the two impacts in every transaction, and then we will form an accounting equation.
Okay.
The first thing that should get registered in your mind is every transaction will have two impact, a debit impact and a credit impact.
Have a good two impacts.
Clear? That is why, Sanjana, I was telling you, accounting equation will always tally, because when we have two impact, always my assets will always be equal to liabilities plus capital. Because I'm recording both sides. When I record in one side, I also record in other side. So my always, when we follow double entry bookkeeping, or always when we follow dual accounting, my assets will always be equal to liabilities plus capital. Clear? Yugeshwaran, you have a doubt. Tell me.
Sir, does the chapter contain more weightage than the chapters which we previously worked on?
See, this chapter is important because this starts building the base actually. Yes, this chapter is important with respect to weightage also. The previous chapters all were more on concept and theory based actually, but I tried to give you a practical dimension also into those chapters. But yes, this chapter has a good weightage.
Okay, sir.
Okay. So assets equal to liabilities plus capital. So every transaction that we look into will always have two impacts. We have to identify whether it is impacting assets, it's impacting liability, it is impacting income, or it is impacting expenses. Clear? Next thing is, in accounting equation, you can ask me, sir, in accounting equation, there is only assets equal to liabilities plus capital. There is no income and expenses. Then why are you worried about income and expenses? Whatever income and expenses that we identify will impact my capital. Because I told you capital means capital includes profit, I told you, right? And what is profit? Profit is nothing but income minus expense. So whatever transaction will impact, if it is a salary transaction, it will impact my capital. If it is a sale transaction, it will impact my capital. Any transaction which is in the nature of income or expenses will be impacting my, in the accounting equation, which side it will be impacting? It will be impacting the capital side. Clear? Assets and liabilities, everyone is aware. But income and expenses, why I am trying to asking you to identify? Because income and expenses will be impacting my capital, because capital includes profits. Clear? And how does profit come? Profit is nothing but revenue minus expenses. Income minus expenses is profits. Any doubt so far?
No, sir.
Okay. Okay. Now let us take one or two examples, guys. I will not go very detailed today. Okay. Let us take an example, guys. Okay. The format for accounting equation will be, first will be serial number. Formats are very important, guys. Serial number, then
Transaction.
Trans.
Asset.
transactions, assets equal to,
Equal to liability plus capital.
assets equal to,
Liability plus capital, sir.
assets equal to
Liability plus capital
liabilities
and capital.
plus
Capital.
capital. This will be the format for accounting equation, guys.
Okay.
Clear?
Okay, sir.
Accounting equation. Let us take one first transaction. First transaction is Ram started business with capital 1 lakh rupees. Ram started business with capital 1 lakh rupees. Okay. Now, I told you every transaction we have to see two impacts will be there. Ram is a businessman, business is separate. When Ram introduces capital into the business, two accounts will get impacted. One account is cash will come into the business because he has given cash of 1 lakh to the business, right? One account is cash will come into the business. Another impact is now business will get an amount that is called as capital. That capital is an internal liability. Clear? So one is in case of assets, and in case of liability, we have to mention each and every assets we have to mention. So the first asset that is coming is cash. How much cash is coming?
1 lakh.
1 lakh. And another leg is capital. Another leg is capital. So 2 legs actually. One is cash, another is capital. So now my business will have 1 lakh rupees of cash and 1 lakh rupees of capital. Every transaction has two impact, right? Every transaction has two impact, right? Now the business is having 1 lakh rupees of cash and 1 lakh rupees of capital. How it will look in the balance sheet? If this is the only transaction, my balance sheet will look like cash of rupees 1 lakh and capital, no liability is there, capital of rupees 1 lakh. This will be my balance sheet if there is only one transaction which has happened in the entire year in the business, or this is the first transaction of the business. First business transaction, if I draw the balance sheet after first business transaction, this is how my balance sheet will look like. There will be a cash of 1 lakh, there will be a capital of 1 lakh. Clear? Okay, forget about this now. Ram started business with capital. Two impacts are, one is cash, another is capital. Clear? Second transaction. Purchased
Goods.
furniture for rupees 20,000. Purchase furniture for rupees 20,000. Now there are
Sir.
two impacts which are happening. One by one, there are two impacts which are happening. I am purchasing furniture. Business will get what? Business will get what?
Oh, furniture.
Furniture. And business will pay what? Cash. So furniture will come under which category? Assets, liability, income, or expenses?
Assets.
Assets.
Assets, sir.
So a new class of assets will be introduced. A new class of assets will be introduced. That asset will be called as, in my accounting equation, a new class of assets will be introduced. How much is furniture, guys? 20,000. And what will happen to my cash? What will happen to my cash? I will come to you, Aditya.
Deduct.
What will happen to my cash?
Minus 20,000.
Cash will reduce because I have to pay. So in the same asset category, one asset is increasing called furniture, another asset is decreasing called cash. Okay. So my new accounting equation, after every transaction, I have to put a new accounting equation. My cash will become from 1 lakh, I have spent 20,000 for furniture. My cash will be how much?
80,000.
80,000. 20,000 I will have furniture and my capital will remain same as 1 lakh rupees.
1 lakh.
This is my new accounting. This is my new accounting equation. The first accounting equation was 1 lakh cash and 1 lakh capital. Now my new accounting equation is 80,000 of cash, 20,000 of furniture and capital of 1 lakh rupees. Yes, Aditya.
Sir, furniture is a type of assets, right?
Yes, it is an asset.
In your Excel, it is like as transaction assets, furniture, liabilities, capital.
No. It will come. It should come here actually. Fine.
That I thought.
Yeah. You're absolutely right. It's just a presentation thing. It will come under assets only. Clear? Any doubt? Are you clear on the format, guys?
Yes, sir.
Okay. Now this transaction, furniture purchased in cash, two accounts were involved. One account is furniture, another account is cash. Both are assets. One asset is increasing, another asset is decreasing. Clear? Which asset is increasing? Furniture is increasing. Which asset is decreasing?
Cash.
Is decreasing. Any doubt? Fantastic, guys. If you are clear on this concept, I will make journal entries very, very simpler to all of you. Okay. I am taking a lot of time to discuss this because it involves a lot of time, because I am building the concept for the next chapter, journal also, parallelly. Clear? Next accounting equation. Paid salary to employee. Paid salary to employee. 10,000 rupees I am making a salary to employee. Now, when I make a payment of salary, what will happen to which are the two accounts involved now?
Cash will be
Cash is
Cash and salary. One is cash, another is salary. Salary will come under asset, expenses, income, or liabilities. Salary is what?
Expenses.
Expenses. Fantastic. A business is incurring an expenses of salary. Now, first, let us come to this category. When I pay 10,000 to my employee, what will happen to my cash?
Reduce.
Cash will reduce by 10,000 rupees. And I don't have a category called income and expenses. When I pay salary, one second, when I pay salary, you have to think whether my profit will increase or decrease. Profit will decrease. Salary is an expense, right? Because of expense, what will happen? The profit will decrease. When profit will decrease, my capital will increase or decrease?
Decrease, sir.
My capital will increase or decrease? See, my profit increases capital, my expenses decreases capital. Simple concept.
Decrease, sir.
If I make a profit or if I make a sale, my profit will increase, capital will increase. If I make an expense, it is a loss, my capital will decrease. So I don't have a category called income or expense in my accounting equation. So I have to see whether when I pay salary, what will happen to my profit? My profit will decrease or increase?
Decrease,
If I
sir.
pay salary, my profit will decrease or increase? Decrease. Expense, right? Expenses will decrease profit, income will increase profit. So since salary is an expense, my profit will decrease. When profit will decrease, my capital will increase or decrease?
Decrease, sir.
Decrease. My capital
Decrease, sir.
increases because of profit, my capital decreases because of loss. So my impact to capital will be what? My capital will decrease by minus 10,000 rupees, my capital will decrease. So my new accounting equation will be, I have cash of 70,000, furniture of 20,000 and capital of 90,000 now. So 70 plus 20 is 90. My capital will become 90,000. Clear? Any doubt? I will stop sharing now.
No, sir. No doubt.
Any doubt?
Sir, have a doubt.
Yes.
சார் இப்போ பெய்டு சேலரி அது வந்து சில டைம்ஸ் வந்து கேஷ்ல இருந்து ரெடியூஸ் பண்றாங்க, சில டைம்ஸ் எக்ஸ்பென்சஸ் வந்து சேலரின்னு காமனா பெய்டு கேஷ்ல கொடுத்துருந்தா கேஷ்ல இருந்து பண்ணுவோமா?
Every transaction I told you has two impact, right?
Yes, sir.
One impact is it will reduce my cash. There is always two impacts to every transaction. One impact is it will reduce my cash, which is an asset. Another impact is salary is what? My expenses, right? My expenses, when my expenses will increase, when I pay salary of 10,000 rupees, my expense will increase. If my expenses increase, what will happen to profit? Profit will decrease. When profit will decrease, what will happen to capital? Capital will also decrease. Income increase means profit will increase, my capital will increase. Expenses increase means my profit will decrease and my capital will also decrease.
Okay.
So whenever we have an income or expense, I have to see what is the impact. If it is an expense, my capital will decrease. If it is an income, my capital will increase. Clear?
Yes, sir.
Clear, guys?
Yes, sir.
Okay. I will stop here with the concept. I will start again accounting equation fresh in tomorrow's class. I will discuss again all these three transactions. I will start fresh again tomorrow. Any doubt in the concept that we discussed now? Guys?
Sir, you got stuck for a minute.
Am I audible now?
Yes, sir.
Yes, sir. Yes.
Okay. So all of you would have learned this accounting school also. But
Sir.
did anyone get the concept why capital is increasing or decreasing?
Yes, sir.
Okay. Now only you would have understood why income and expenses is adjusted to capital, because it impacts the profit. Whenever profit is increasing, what will happen to capital? If profit is increasing, what will happen to capital? Capital will
Capital also
increase.
increase, sir.
When expenses are incurred, what will happen to capital?
Capital will increase.
Capital will decrease. When expenses are incurred, my profit will
Decrease.
my profit will decrease. When income is increasing, my profit will increase. Profit increase means capital increase. Loss means capital will decrease. This concept you have to register in your.
Sir, your video is stucking, sir.
Sorry, you got
Yeah.
again.
I got stuck, I know. Anyhow, my class is over. So this concept, is it clear to you guys?
Yes, sir.
Yes.
Okay.
Yes, sir.
We will start again with the same concept in tomorrow's class. Don't miss tomorrow's class. I see only 10 students here out of 19 students. That is the reason why I am holding the class now. Otherwise, I would have taken an extended class. Clear?
Yes, sir.
Let's meet tomorrow again. Tomorrow's time is
Yes, sir.
7:30 to 8:30, 8:45 or 9 also. So be prepared, guys.
Okay, sir.
Clear? See you tomorrow, guys.
Thank you,
Thank you, sir.
Bye,
Bye,
sir.
Thank you. Thank you.
Bye, sir. Thank you, sir.
Thank you, sir.
Thank you.
Thank you, sir.
Thank
Bye,
you.
sir.
Thank you.